it's going to cooperate, or, technology. Okay. Can you see me?
Yeah.
I think you're frozen. Okay. You were frozen for a second, but maybe it was just the connection there. Okay, we're redirecting to Facebook Live, so. It's crazy these days because everybody's like on the computer from home, and it's like the strangest times of day your computer just opts not to work. So
Yeah, it's never easy.
right. Okay, perfect. Well, we are here and we are live, and I'm going to turn over the controls just so you can show some of your fancy screens here in just a couple minutes. But before we dive in, I want to first of all welcome you and thank you for being here. I'll let Nick sort of give a little bit of his background in just a moment, but we actually met through, I was holding an open house for a friend of mine's house, and he came through, and it was funny because I had an infographic that was printed out just on market stats. And he kind of looked over and says, "Where did you get these stats?" And then I thought, oh gosh, I started second guessing myself. I'm like, are they wrong? What number did I put wrong? Because I just mailed them out to like 1,000 people. And so we got to talking, and I was just fascinated with kind of his perspective and his take on how he evaluates markets. And in particular, we were talking about the Austin market. And then we got into, hey, what do you do? How do you do it? Let's talk about that. And it was just kind of a really neat, fun conversation. And coming into a new year, like so many things have changed this year. If you were before, and I do my marketing consulting, I'll say, okay, well, let's look at your 5-year plan. And now after COVID, everyone's like, yeah, we're lucky if we can look 3 months ahead, because we've all realized that, things change faster than we prepare or that we can plan for. So, a lot of people are just kind of looking out to the next year or 2 years or even 3 years. So I thought it was kind of a really good time to invite Nick on to sort of talk about what he's seeing and where he thinks this is going to go, because everybody right now is, not everybody, but a lot of people, especially if you were around in 2008, 2009, are going, this is insane. Like, we're so headed for another bubble, a real estate bubble. It's going to come crashing down around us, and we're going to be back to where we were a decade ago. And we'll talk a little bit about why that's probably not the case, but just what's going on specifically in the greater Austin area. So I'm super excited for today, and I'd like to welcome you, Nick. Thank you so much for being here.
Yeah, of course, Heather. It was great meeting you a couple of weeks ago at the open house, and I'm excited to be on here today. So just, a little background on myself. My name's Nick, and my company, Reventure Consulting, which I started a year ago, focuses on providing data analytics to real estate investors, owners, home buyers, so they can make more informed investment decisions. Because, a lot of the things you were saying about, COVID, pandemic, how things kind of, the 5-year plan shifted now to the 1-year plan because we don't really know what's going on. There's a lot of insecurity out there. There's a lot of confusion. There's a lot of people saying different things, right? Like you said, some people are saying, oh, we're in the midst of another real estate bubble. Other people are saying, oh, this is the greatest growth we've ever seen. How do you make sense of all of that, right? And the only way to truly do that is by looking at objective data on what I call the real estate fundamentals. And, that's looking at things like, real estate demand growth in terms of population, in terms of income. That's looking at things like housing supply growth in terms of new permitting and new construction, and looking at how all of those relate to each other, both on a macro level, on, like, let's just say the Austin city or Austin metro level, but then also zooming down closer and looking at, let's just say, a neighborhood or a zip code, and trying to understand those dynamics from that level.
And just a couple things, and I'll kind of chime in from time to time. So Nick is creative and, isn't totally, was a left brain or right brain, but sometimes the number people lose the more creative, or like, show me the pretty stuff. So I'll just kind of chime in from time to time if that's cool, just to sort of, for those of us that get lost in the factual stuff, that's no fun. And I just want to point out something, though, that you did say, just to make sure and again, we're talking about Austin, but real estate is local and even more so hyper local. So, you can't just watch whatever your favorite news source is and say, oh, this is what's going on, because you'll hear things about the real estate market nationally, but that really doesn't mean anything to us here in Austin, or, you know, somebody in Detroit, Michigan, because every market's going to be different. So that's why we're focusing specifically today on the general Austin area. So
that's right. That's right. And the way I like to start thinking about these things, right, is to say, all right, you know, let's actually forget real estate for a second, forget home prices, forget all that, and just ask ourselves, you know, what fundamentally is important when you're looking at a market, right? Like, what are the fundamental things that you want to see in that market that are going to result in real estate growth going forward? And so that's kind of what I specialize in looking at. And the US Census puts out a lot of great data, which tracks all of these fundamental things like household formation and income growth. And it's, you know, it's really not enough to know that number just for your city, right? Because if you know that Austin's population increased, you know, I see the stat, 150 people a day over the last couple of years. Well, what does that actually mean? Like, is that good? Is that average? Is that below average? So that's kind of what I specialize in doing. And that's what we're going to take a look at right now. So Heather, can you see my screen?
I can. Yeah. And when Nick says, is that good or average, he's talking about just numerically, not a subjective opinion to, yes, it's good, these people are moving into our city, or no, it's not. It's more just the objective in terms of what it means, not, you know, a judgment call if we like that answer or not.
Of course, right. Not a judgment call in terms of, oh, do I like gentrification or do I like all this growth? It's more of a factual assessment of, you know, is the fundamentals of real estate demand growing? And so in this graph, what we're looking at is household growth, household formation from 2014 to 2019. So it's the growth in households, or you could think of it as in like addresses or residences in a metro area. And each of these bars is a different metro area in the US. So for instance, this one's Albuquerque, New Mexico. This one's Nashville, Tennessee.
Oh, another favorite place of mine.
You'll see this red bar is Austin, Texas. And the reason you see it all the way to the left on this graph with one of the highest bars is because its household growth of plus 16% over the last 5 years was the second highest of the 100 largest metros in the US. So Austin was number 2.
So that's just like, not, that's net, like how many more people have moved in, like new construction homes or rental buildings, rental units being built. It's just truly more people coming in, not net coming, not going. That's just what's left over when all the dust settles.
Exactly. That's a net figure. So you see plus 114,000. So in the 5 years, Austin added 114 addresses or residences to its metro area where people actually live over 5 years. Right. So that's crazy. That's over 20,000 per year. And this is fundamentally what's driving your demand for homes and apartments is household formation and people moving into the city. You can see that the US average here is plus 5.6%. So the average metro trickled along at about 1% per year over the last 5 years in growth. Austin was plus 16, 3 times the US average.
Just out of curiosity, check that over one more. Who's number 1?
Number 1 is Provo, Utah.
Huh, interesting.
Yeah.
Okay.
Provo's the youngest area in the US by far.
And you know, it's interesting though, just to look at that, when you look at the number of households. So even saying that though, the difference in households, that it's only an increase of 28,000 versus 114,000.
Sure.
We're looking at percentages. So
exactly. We're looking at percentages. If we were looking at raw numbers, you would see like, you know, Los Angeles might be the biggest metro, so that might be number 1.
Right.
But on a percentage basis, which is really what matters, you know, it would be much lower on the list. And you can see here, I mean, look, there's areas in the US that are declining, right? That are losing households. And if you think about what that means, like if you're losing households, what does that mean for real estate? It's not good. So the fact that Austin is number 2 in this.
And can you just define for folks, because I know when we talk about Austin, people think like Austin, Cedar Park, hey, like Dripping Springs, like it says MSA, comma, Austin, I think it
Yeah,
said. Can you just define what an MSA is, or like what you mean when you say Austin?
sure. So the Austin Metropolitan Statistical Area, that's a geographic designation the US Census uses. In Austin's case, that's 5 counties. That's Travis County, that's Williamson County, Hayes County, Caldwell County, and Bastrop County. So
Perfect.
when I'm referring to like the Austin Metro, I'm referring to the area encompassed by those 5 counties.
Awesome. Thank you.
Yeah. So adding population, adding households, that's one piece of the pie, right? You need people moving to a city, and having demand for real estate, for that real estate to go up. But the other piece of the equation is income, right? So you could add as many people as you want to an area, but if they're all kind of lower earners or don't have jobs, like that's not necessarily good for real estate. So what you want is to add households and population, but you also want to grow income, because higher income is going to allow people to afford more expensive homes and pay higher rent. And when you think particularly related to like how people get loans, right? Banks underwrite people's income levels to determine a lot of the times how big of a loan they can get to buy their home. So if you're growing income, that's also a really good thing. And you can see.
The other thing I was going to point in about that is that I was reading something yesterday that the Feds have pretty much said they're going to keep interest rates at or near zero for the next 2 years, I think is what it said. So when you factor in higher income and a pretty, not having the fear of interest rates going up, I imagine that also weighs in.
Yeah, well, 100%. If you keep interest rates low, you're making it a lot easier for people to make the shift from renting to owning, right? You're making that calculation a lot easier. But to that point, I think every market would benefit for rates for home values. This is really saying, fundamentally speaking, where is the strongest market? And in terms of income growth, Austin is 24th out of 100 over the last 5 years. So you could see its middle class income level, which is referred to as median household income. That's the middle class earner in Austin, went from 63,000 5 years ago to 81,000 in 2019. So in the span of 5 years, middle class incomes went up by $17,000, which is huge. That's huge growth. And back to that example with with banks, if you're coming in with an $80,000 income as opposed to a $60,000 income, that really opens up a lot more of what you can afford, and gets you a better loan and lowers your down payment. In this case, the US average was plus 22%. Austin was well above that. And once again, you could see that we can't take growth for granted, because there's a lot of areas in the US which really aren't growing their incomes that much. You could see kind of down here to the right. So the fact that Austin is number 2 in household formation and in the top 75th percentile in income growth is really what's fundamentally pushing values up in the area.
And that's the other thing to consider is that we see, and just from a practical standpoint, so we have such a shortage, and I don't know if you're planning to go into like the inventory as part of it, but we have such a shortage now. And I just had a closing that right down the street, pretty similar home, sold for $550, and we were going to list it at $585 because it's pretty similar. It had a pool and the roof was newer, but for all intents and purposes, I mean, it was a couple weeks after that close that we put on the market. We ended up agreeing to list it at $593. It sold for $630. I mean, not a month after the other one had closed. So $80,000, and the only real difference was a pool. So when you have the demand out there and the supply there, then and you have interest rates low, incomes going up, people can afford to pay more for these. We think there's no way it can appreciate that fast, and we're going, well, what's going to happen? Is it going to crash? But it's one thing if we were over leveraged on lending, but I mean, it appraised at that. So suddenly now the value, the bar is set here instead of here. and it just keeps going up.
Sure. And I think, yeah, you bring up some really good points there. There is a shortage right now of inventory in Austin. And I would say that shortage, this is where we probably want to start drawing a comparison between the market for single family homes and, apartments and multifamily rentals. Because there's starting to be a difference there. So the graph we're looking at now tracks permitting of new homes and apartments across time in Austin. And the green line is the permitting of new apartment buildings and apartment units. The blue line is the permitting of new homes. And for something like this, it's helpful to kind of go back in time to get some perspective. And so, here we're going from 2020 all the way back to 2004. So we could see back in 05, 06, this was prior, like you were referencing the financial crash. Austin was permitting 17 to 18,000 new single family homes per year. And typically when you permit a home, it probably gets built in the next 12 months or so. You can see that it was only permitting about 6,000 to 8,000 new apartment units back then. So there was this like big gap between the permitting for homes in blue and apartments in green. And then, of course, during the recession and the financial crash, all of this plummeted, like new building went way down. But you can tell basically over the last 10 years that the permitting of apartments in green has really caught up to the permitting of homes. And we're in a situation in Austin right now where I think we have a shortage of the blue. I think we have a shortage of single family permits, but we're starting to potentially see an oversupply of the green. Of multifamily apartments.
And can you just define for people multifamily?
Sure. In this case, it's any permit pulled. It could be a duplex. It could be a duplex or a triplex, 2 to 3 units, or it could be a 200 unit big apartment building downtown.
So
all
pretty
of that
much anything that's not, so we're not talking just commercial 5 units plus, we're talking literally anything that's more than 1 unit.
Anything that's more than 1 unit.
Okay.
And I think why you feel good about single family looking at this graph is, all right, so in 2020, Austin's on pace to permit 21,000 new single family homes for construction, which are going to be delivered sometime over the next year. The previous peak was 18,000 in 2006. Austin's population in that span has grown by about 800,000 people. Right? So we're permitting about the same amount of new single family today as we were in the mid 2000s, despite the population in Austin being 800,000 higher. So you actually feel pretty good about that from a single family perspective, that the growth in new single family supply is incremental, it's not shooting up out of nowhere and pretty stable. But then when you look at multifamily, you see, and apartments, duplexes, multifamily, we're at 8,000, 9,000 per year. Now we're up to 19. So this is where we probably want to start to draw a parallel that the single family market, you reference low inventory, it'll probably stay that way. The multifamily and apartment market, if you're buying a property for investment purposes, you probably want to look at this. And if you're underwriting a property for investment purposes, maybe you need to be a little more conservative in terms of your vacancy assumptions or your rent growth or how much you're valuing the cash flows of that investment property. But if you're buying a single family home, I think you feel pretty good looking at this data.
Okay, so let's dive into a couple things. So one, we've got let's first start on the single family. So, for all intents and purposes, the single family starts are, the growth is outpacing single family starts. And then, top that in, and I'm sure these stats are pretty recent, but now, for some of these builders, you go in and they're like, hey, we're on a lottery. You can put your name on a wait list. We're only doing 2 new ones a month. And, if you get picked for the lottery that month, then, you're 18 months out on a home. So I think some of those are just a little tricky because we're in a place now where, lumber was down, lumber was up, lumber was back down, lumber was back up again. So it's kind of making that a little bit tricky, but what we can see for sure is that regardless, there's still a shortage, whether it's because we can't get lumber or whether it's just because, whatever the reason is. So how, because I have a lot of people that are saying, I want to get into a new home, or, I think I want to upsize or upgrade my house, but did we miss the market? We've seen some crazy appreciation, and certainly, just a disclaimer, neither of us are attorneys or accountants, so always seek legal, competent, and financial advice. And this is just for educational purposes, and we're not telling you to or not to do something. But when it comes to, saying, hey, have I reached the top of the market? Like if I upgrade to a bigger house now, am I going to lose my shirt? Should I just stay in my smaller house and not move forward? That's kind of, I think, where a lot of people that are coming in, they either need a house or they don't, so there's not really an option. We have to just kind of jump in and figure out how to be competitive and get our offers accepted. But for somebody that's kind of like, I think I want to move because of X, Y, or Z reason, is it safe, from your data points
Sure.
anyway, to say, yes, you could probably upgrade and continue to see some appreciation?
Yeah, no, I think absolutely. And the reason I feel confident in saying that is because of the fundamental growth factors that we talked about a couple minutes ago, right? I have a lot of clients come to me with questions of different markets around the country. And look, there's markets I would not be saying that about. And I'll be blunt. Boise, Idaho would be one of them. I think that market's in a bubble, and I wouldn't advise anyone to buy in Boise right now. But I think with the fundamental growth that Austin's had, and then, we just looked at historical figures there, right? That doesn't even take into account.
Like everybody, like you coming from New York and your mom, and then all these people.
Yeah, exactly. I mean, I just moved here in the last year. I wasn't in those numbers. And, Oracle is relocating their headquarters out of Silicon Valley. That's not in those numbers. So, Austin's growth is only going to get stronger. There's another data set I like looking at that tracks business formation, like the formation of new businesses, and comparing that across different areas. And Austin is number one in the formation of new businesses. And that makes
Is that nationwide or within Texas?
Nationwide.
Wow.
Austin has increased its growth of new businesses over the last 5 years more than any other metro in the country, and it's not even particularly close. And why you feel good about that is because that's a forward-looking indicator, right? Because if someone registers a business and, let's just say some of them fail, but the ones that succeed, they're not going to actually apply like meaningful gains to income and jobs in the population for probably 3 to 5 years, right? It takes business some time. So if you're seeing big upticks in business formation in 2017, 2018, 2019, that means that 2021, 2022, 2023 are going to see strong gains. So I think Austin has this unique combination of really great historical performance, but then in the indicators that you care about for future performance, it's also doing really well. So
what do you think about all of that? Okay, this is data, this makes sense historically, this makes sense in the future. And then just because we can't have anything easy in 2020 or in 2020, throw in like COVID and a volatile political environment.
Of course.
Does that have any, how does that impact your particular outlook on the future? Because I talked to somebody yesterday who, had to close down his restaurant. And we know obviously that restaurants and those types of service industries have struggled. But how or does that even factor into this bigger picture?
I'd say it does a little bit, but this is again where context is key. There's cities in the US that have lost 12% of their employment in 2020. I mean, the New York metro area has lost 1 million jobs. Austin has lost 2% of its employment. So yeah, Austin, like you mentioned, there are some unfortunate realities to the situation in Austin right now, but Austin's one of the best performing employment metros in the country right now on a relative basis. And you could go to a place like New York, Las Vegas, or Los Angeles, where the job losses are 4 to 5 times higher than Austin, like literally 4 to 5 times higher. For one person losing a job in Austin, 5 other people are losing their job in these other cities. And in those cities, yeah, I'm like really concerned about how they bounce back and how the real estate market bounces back.
Well, they're all moving here, so.
Exactly. No, that's a great point. They're moving to Austin and they're moving to Texas.
And so kind of on sort of that other, so then if we go back to that that graph of the multifamily starts. And I think there's a couple of interesting things to talk about with the multifamily and rental market.
Yeah.
You know, for one, a lot of people coming, you know, if they've lost their jobs or, you know, had some adverse, I think there's going to be a little bit more of a rental opportunity than maybe we've seen, but still not off the charts because interest rates are projected to still stay kind of low. But then you also add in, there's going to be the eviction moratorium expires. And so there's going to be evictions. Like, what do you foresee or what do you predict based on past and present and future, the rental space? Because again, there's going to be tired landlords that are sick of it or, you know, ended up going upside down because their tenant didn't pay, so they couldn't pay their mortgage. Like, how does that all sort of play into it so we've kind of talked from a primary residence, like buy my home, live in my home, we're solid, we're safe, we're going to continue to see growth and appreciation, and it's, you know, largely predicted to be, you know, the next few years relatively smooth sailing. So then kind of factor in these things, and what does this chart say about the rental, and why are we ramping up for such an increase in the rental market?
Yeah, those a couple questions in there. So I am not overly concerned, at least in terms of, you know, eviction moratorium, and I'm not really concerned about Austin as far as that goes because its growth has been so strong that, you know, again, in a market like New York or Vegas, I would be really concerned about that.
Well, especially from what I understand, Vegas governor just basically extended it unilaterally. So yeah, I wouldn't want to be there.
I didn't know that. All right, that's good to know. But I'll say this about Austin's rental market, you know, and again, this is for people who you're buying an investment property, or, you know, you're a more commercial investor and you're buying buildings and you want to rent them. The last 2 to 3 years, Austin's rent growth has definitely lagged the rest of the US. And a primary principal reason for that is kind of this uptick we're seeing in permitting. And, you know, I'll actually give some credit to the mayor of Austin, Steve Adler, because when he got elected, he said he would prioritize getting rid of the backlog in permitting. And he's definitely done that. So it's now easier to build a multifamily property in Austin, or at least get it approved quickly than it was 5 years ago, which is good for the city overall. I mean, that's good. You know, you want to build the housing to accommodate the growing population. But at the same time, and I can tell you this just from all the real estate developers I talk to around the country, Austin is the most sought after and desired market for real estate developers. So, you know, you see this jump here from 2019, Austin permitted 14,000 multifamily permits up to 19,000 in 2020. That's a massive jump. And that's because all of these developers are coming from around the country and they want a piece of Austin's growth. So, you know, they're building apartments and they're building them all over. And that's a good thing for the city. But it means that if you're a rental landlord, you know, you're just gonna, it's not the end of the world, but you just got to be a little more realistic and conservative about, you know, your pro forma expectations about rent growth, about vacancy and concessions, that, you know, you might have a couple more vacant units. You might have to give away 1 or 2 months free.
Well, and that's the thing, you know, if you go to a big building with 100 units, their, you know, move-in specials are $299 a month versus first, last, and security on a house. So things to kind of consider.
That's right.
But then, you know, I imagine this also depends on where, right? If you're, you know, right in city of Austin, it's one thing. If you're up in, you know, Williamson County, where there's not as much permitting and growth and things of that nature for rentals, then it might be different. So that's where, and we can kind of use that sort of to pivot, where you shift gears and say, okay, but not all of Austin is created equal, right?
Right. That's
so,
exactly
you
right.
know, different areas are going to have different things going on, even, you know, the different counties, but not even just the counties, even certain zip codes within different counties.
That's right. Right. So far we've been talking about Austin in a really like aggregate sense, like it's just one entity, but you know, you brought up a great point in the beginning, is that real estate's local and hyper local. So the analogy I like to give is, you know, getting your market correct, like being in a growing market, just basically widens your margin for error on where you buy, right? It's like a rising tide lifts all boats. So, you know, if 50,000 people a year pouring into the Austin metro, 20,000 households are being formed a year. Everywhere is going to get better, but some places are going to perform better than others. And so, we go back to this map of the counties in the Austin metro area. And now we're kind of looking at it by appreciation in home value over the last 10 years. So let's just start here with Travis County. 10 years ago, the average home value was 220,000. Today it's 410,000. So that's 84% appreciation on average in Travis County over the last decade. That's really high. That's really, really strong. Yeah. And you could see that, all right, some of these outlying counties, Hayes, Caldwell, Bastrop, they're more like plus 55% over the last 10 years. Bastrop went from 150,000 to 235,000. Hayes went from 187,000 to almost 300,000. So that's still strong growth. That's above the US average for that period. But, Travis County has really been where it's at in terms of most of the kind of hyper appreciation, and then Williamson County to a little bit of a lesser extent over the last decade for homeowners.
And I do also want to point out, you say, well, a decade ago, the market crashed and, the price, houses dropped. And I do want to say that Austin or Texas was a little bit, I don't want to say insulated from that, but they didn't have the same losses that, whenever you see the housing crash, it's a handful of places like Florida, Nevada, California, Arizona. I think Michigan was kind of in there, but it wasn't like everywhere across the country dropped 30, 50, 80% in home prices.
No, not at all.
And because of the lending laws in Texas, where you can't just, refinance out 100% of your equity every, 60 days essentially, and, certain requirements on lendings and type of loans, Austin, or Texas in general, but Austin didn't really have that bubble that people seem to be worried is coming again, because it just didn't have the underlying factors that caused that bubble. So, I don't, well, there you go. You have,
hold on. This is Phoenix. Okay. That's Phoenix. Don't, just give me 1 second. That's Phoenix. All right. So,
you're saying my point. Like if you looked at like South Florida, for instance, I'm guessing you would see a pretty massive drop in 2008. To
so to your point here, so this line represents the average home value in the Austin metro area over the last 20 years. And you could see that we had, a little bit of a hump here in early 08, and then values went down, it looks like about 8 to 10%.
Yeah. I'm talking, I had a friend whose house was, worth like $1 million, and she short sold it for 369, in South Florida. So, we're not talking about those kinds of things here.
Yeah, no, I think to your point here, I'm just going to overlay Phoenix. So the red line's Phoenix, the blue line's Austin. So, you could see Phoenix was like, whoa, way up here during like the mid to late 2000s. Then it was like way
down below where it was in
and then
2000.
you have Austin kind of steady Eddie over here. So I think you bring up a good point that Austin and Texas in general was not as exposed to, it's not as boom or bust, let's say.
A great way to say it. So, and I just wanted that, I'm glad you brought that graph up, because I think that might help people feel a little bit better in, in terms of, repeating, let's say, a decade ago.
Yeah. And the other thing to think about with that is that Austin, not only did it not really have much of a slide 10 years ago, its growth now is way higher than it was 10 years ago. Mm-hmm. Right. So Austin wasn't getting Oracle corporate HQ relocations in 2010. Now it is. So that's another thing to consider.
Well, on Apple and Tesla, it's just crazy what's coming from California, just in terms of big companies, not just the individual people that are saying, hey, I'm coming here. But, and then, I don't know if it's talk or not, and it doesn't affect Austin per se, but, looking at moving the stock exchange to Dallas. These are pretty significant things for the state.
Yeah. Huge.
I'm guessing that's probably not a realistic thing. It's probably somebody blowing off steam, but just the fact that conversations like that are even occurring, I think it bodes well for our general market and economy.
Yeah, definitely. I think one interesting point to start talking about is, this graph or this map looks at long-term appreciation over the last 10 years. We can also start thinking about all right, how are things looking over the last 1 year, right? And you're starting to see over the last year in Austin, that trend you saw of the last 10 years of Travis County outperforming everywhere else is kind of, at least over the last year, has gotten more exacerbated. So in the last year, home values in Travis County have gone up by 11%, which is crazy. So if you'd bought your home a year ago, 370,000, you'd have another 40,000 of equity just 12 months later. And again, it's this trend of like Travis really strong, Travis really strong, Hayes and Williamson kind of second place. And then lately over the last year, Bastrop and Caldwell have kind of started to fall off a little bit. I'm not sure really if that's part of a long-term trend. You can't really just look at 1 year and project out into the future, but it's probably useful for real estate owners and potential home buyers to know right now that Travis County, Hayes County are really seeing over the last year the biggest increases in appreciation. Heather, I don't know if that kind of jives with what you see with your clients and talking to people, but
yeah, for sure. I mean, and again, it's in the last couple of months, it's just been, and obviously you're not looking that micro, but even just in the last couple of months alone, just people are still, and I don't know if it's because of lockdowns, companies, whatever, like people can't get here fast enough, and the inventory we can't sustain the inventory here. So it's like, if you can make a move now, if you want to upgrade, you should do it. If you can, get into a house now, because, I've got somebody that I'm working with and it's been probably 8 months, and like, well, do you think we should just, move forward on this now or wait a little bit longer? Price is going to go down. I'm like, look, if y'all bought 8 months ago, you guys would be up this much. I had clients that did buy in May, and we were a little depressed because it was the middle of not middle, but it was, well, we were just trying to figure out this whole pandemic thing. And they got their house for 485, and I'm pretty sure I could turn around and sell it today for 560 to 570.
wow.
So, and there's different factors in different areas, but it's not the time where you say, oh, well, waiting, unless you're going to wait 5 years. But like you showed in that chart or that graph from the last 20 years, again, the underlying factors in Texas and Austin in particular, I don't foresee the dip. So if you're waiting, because I had a lot of people when COVID first hit, well, I'm just waiting for the foreclosures to hit. I'm like, they're not going to hit.
No, that's not going to happen in Austin.
Yeah. Well, thank you for saying that.
So. Yeah, no, and this is again why it's so important to focus on fundamentals, right? There's a headline for every argument, every 2 days in opposite directions, right? But if you focus on the fundamentals, intrinsically, what matters with home value and real estate value is, are there people moving to a city? Are their incomes increasing? And thirdly, are we not going out of control in terms of building new homes? If you if you check all three of those boxes, if you satisfy those criteria, you should feel good about making your decision. That doesn't mean there won't in the future be some type of maybe small dip, but if you're checking those three boxes, you should feel safe and secure about the decision that you're making. And
so, all right, this is kind of a pivot a little bit. So before we sort of wrap up, and I get you're not in the day-to-day business of real estate, but we mentioned your mom is looking to move down to Austin. Right. If somebody contacted you and said, hey, Nick, I think I'm coming to Austin. I want to move to Austin. What do you think? Where should I look? Like, what would you, from just a data, not, I would go into, well, what's most important? Is it schools? Is it, amenities? Is it this? Is it that? But strictly from a number standpoint, whether I want to buy an investment property or I want to move my family here, like, how would you answer that? And I know when we talked about your mom, we're like, well, what is she like? Maybe we should check out these kinds of areas for her. But that aside, what would you say to somebody just empirically, I guess?
Right. Yeah. Strictly from a financial standpoint, wanting to find the area that's going to have the most growth. Well, this is a great segue because, I think an important thing to focus on a local level is, I apologize. So, this map here, we're looking now at zip codes in each county. And, you can get really narrow and start trying to, figure out what are the zip codes? What are the areas that are going to see the most growth? And one thing that I found to be really true, basically in almost every market, is that if you're buying into a expensive area, you're going to have less growth than if you buy into a more moderately priced area. That's true almost everywhere across the US over the last 20 years, that the areas that are more affordable and more reasonable tend to see more growth. And that makes sense because, you know, you get to certain price points, right? And you just start pricing out a lot of people, right? So if you're buying into an area that's like that, you know, you're just going to be pricing out your demand, pricing out demand for that real estate. So I would say in terms of Austin, let's focus.
Well, and on that, I think it's also important to understand that you've got to look at a different market, right? Because what 500,000 buys you, I mean, you saw the median home price is 411. So, you know, in some places, 400,000 is an expensive home, you know, in Austin, it may be a million, you know, so I think it's also important to say, what is that number-ish ballpark? I mean, and then you've also got to factor in your family and your other requirements. But like a friend of mine used to always buy pre-construction, and she'd buy like the middle to, you know, the lower end middle of a neighborhood, because she's like, there's always going to be demand to not have necessarily basic, but there's always going to be demand in the neighborhood, but not everybody wants, you know, or can afford the top. And it's kind of always stuck with me. It's just kind of a good common sense strategy. So get into a community and don't buy the most expensive home in the community.
Yeah, no, agreed. And I think just to your point about making it local to Austin, right? Just this graph here, each dot is a different zip code. And what we're doing is we're comparing the home value 10 years ago in the zip code to the growth over the last 10 years in the zip code. And what you can see here is that the further left that you go, AKA the more affordable the home value was 10 years ago, the higher the growth over the last 10 years. So Austin's highest growing zip codes, 78758, 78721, 78752, 78741, et cetera. These were all affordable 10 years ago. You zoom further to the right here, the more expensive you got 10 years ago. I mean, you still got good growth.
I mean, can you mouse over that last one you were on, the one up above, just as an example? So 78703, you say, okay, well, I mean, still 78% is pretty remarkable. I get it's not 100 and whatever, but but you've gone up 430-ish, $425,000 in that span of time, and then go up to kind of the top left where the, you know, yeah, that one's fine. So you've gone up 200. So you also look at that as well, you know, you got to look at the percentage, but you also look at just the dollar amount that you've increased. So it's not like just because you bought or buying a home in the 6-7 million plus price point, it's not, I mean, you may earn more dollar, you know, a higher dollar increase. It's just not going to be as high a percentage.
Sure, exactly. Yeah, no, it's a good point. You know, most of this focuses on percentage increases. You know, and again, I would never say, you know, if someone has the money, right, to buy an expensive zip code or buy an expensive place, go ahead and do it, right? It's not like you're really, like you said, plus 78% still pretty good.
Sure.
But you know, this is for, let's just say, most people, right?
Right.
On most budgets, right? You know, and you know, I bet, you know, most people, more middle class, right? Or it's good to know that, you know, you buy into these affordable areas, you're going to do pretty well, right? And in terms of where in Austin, you know, maybe the flow and the path of progress is, this map looks at existing home value. So the greener shaded the zip code, the higher the average home value. And then the bluer the zip code, the lower the home value in the Austin metro. What you can see is that Austin has like a really concentrated, wealthy real estate pocket here, kind of in like the northern part of Hayes County and the western part of Travis County is where a lot of the real estate wealth is in Austin. And, you know, you would know better than me about why that is. And actually, I would be curious to ask, why do you think it's kind of developed here historically?
You know, I mean, well, a couple things. One, like closer you get, I mean, anytime you're closer to a city, you're obviously going to have higher values just because of amenities, access to things. Schools, I think, play a big role in this. And I, you know, as an agent, can't really talk about specific schools or districts, you know, because you could get into some trouble there. But generally speaking, I'd say, if you go to Westlake Hills, that's Eanes School District. It's known to be, one of the best in the state, if not, for sure, Austin area. It's close to downtown. It's close to the highways. It's got lots of shopping. I mean, it's pretty much, everything you could ask for in a city. So it just makes sense that that's where it's at.
Yeah.
And then obviously when you're in and around cities, just by nature, they're going to, assuming people want to be in the city, be a little bit more expensive, just because they want to be closer to the amenities. They want to, be near downtown, the events, the activities, that sort of thing. And then when I think you get out, like to the Lakeway area to the left and to Dripping Springs, I think you've got a lot of people that, want to be close, but don't necessarily want to be on top of people. So it's people that still kind of, they're still successful. They still do well. They still, want a nice home, but they necessarily don't want to be in the middle of it all. And, Dripping Springs, Lakeway, like Steiner, where I am, these are still all really good schools. So I feel like schools is a big factor, because I know a lot of people, when we moved out here, my husband, one of the reasons we came to Texas is he'd lived here before and was like, the schools in this area. So, I think that is a big factor.
Yeah, that makes a lot of sense. And, like you said, there's so many individual decisions that go into buying a home, right? That you can't really pigeonhole it into like one method of analysis. But I'll say this, if I'm betting on where most of the appreciation is going to be in Austin over the next 10 years, I'm not betting over here. I think these areas will do well. Like you're not going to lose money. You're still going to earn a return. But there's a couple zip codes in particular that I think are poised to do really well. One is 78744. Average home value in the zip code currently of 283,000. Pretty affordable, right? For Austin and for the rest of the country. And you look at the access that this zip code has to downtown. You kind of go to the middle of the zip code. It's a 15 to 20 minute drive to get here. And it's really affordable, 283,000. You go a little further north, 78724. This zip code is definitely a bit more earlier on in its progression, but 260,000 average value. And you're, again, in some cases here, a 10-minute drive, here a 15 to 20-minute drive to get to downtown Austin. 78754 as well. That's another zip code that I really like. So
putting my real estate investor hat on, this would be a good place for me to start marketing to flip houses.
Yeah, definitely. Yeah. And maybe it's it's a different type of investment than just buying a home.
Sure.
Yeah. And generally speaking, so just for some background, right? At ReVenture, I look at this data for every market across the country and, every zip code across the country. And there's just certain consistent trends that seem to occur. And this combination of affordable neighborhoods in striking distance to the downtown, they almost always do well. And so that's kind of where I would look. But, more broadly, back to what we've talked about consistently throughout this whole discussion, is that Austin's great growth overall, households, incomes, not a ton of new single family construction, is just going to kind of provide growth and appreciation across the area. So you really can't go wrong.
And I get, we can't predict the future, but how long would you say, how would you say that you feel comfortable with these numbers for 1 year, 2 years, 3 years, and obviously could go beyond that, but you feel like, hey, for the next 24 months, this is it, you're good. Or the next 12 months or the next 36 months. Do you have just kind of your experience? This is where, I think we've got a good solid couple of years of growth before we have to reevaluate potentially.
For me, I feel good about 5 to 10 years down the line for Austin, because again, the gains, and I don't mean to sound like a broken record, but the gains being made in household formation, jobs, businesses, income, corporate relocations, these are not things that just like impact the market for a year. These are things that build demand growth for decades. And, like for instance, Oracle's moving their corporate headquarters here. Tesla's doing the Gigafactory. Like these are 10 to 20-year things that are occurring. Mm-hmm. So I feel good about, making these projections a decade into the future. The thing you do want to watch out for though, is that supply component, right? So let's just go back to this graph here with the new permitting. This is maybe ultimately the one area where you can go a little awry. So if we kind of go to 2021 or 2022, and then single family home construction in Austin or permitting were to shoot up to 35,000, right? Then at that point, you want to start maybe doing a little reassessment and thinking, all right, that's a lot. Like, even though Austin's growing a lot, like, are enough people going to be able to move to fill that? But until that happens, and to be honest, I don't really think it will.
I mean, the greater centralized Austin MSA, if you will, this happened in Florida because you're surrounded by water. You got Everglades on one side, ocean on the other. So you could only go up. There's a shortage of land. And I'm not saying Texas has a shortage of land, but if you want to be within a 30 to 60 minute commute of Austin, there's not a whole lot of opportunity for new construction.
Yeah, that's a great point. I mean, we switch here to the satellite imagery for a second, right? And we zoom in. I mean, we're seeing the density. We're seeing the rooftops and the density here in these zip codes near the center of Austin, right? We even go south of Austin. We're seeing lots of density here, lots of density, lots of density. And then north probably has even more density, right? And so to your point, it's especially single family homes, it's hard to build more. Maybe you could squeeze some multifamily in here, but sure. For single family, you got to go out here.
But right? I mean, if you like where I live, we've got 5,500 homes, and I don't know how many thousands of acres the whole planned development has. Like, there's just not any more of this close to Austin. And I know, where we are, people are like, oh, it's such a drive to Austin. And, without traffic, it's 30 minutes, and that's a long drive. So I think that's something to consider with the new starts. And obviously you always want to be looking at the data and looking a couple years out just for your own, just to know what's going on. But just to that point is there's not land to be able to build, to be in a close proximity to Austin at the scale to have those kinds of permitting starts.
Yeah, I totally agree.
Awesome. Well, thank you so much. First of all, I've learned a lot, and it's really fun for me, even though I'm, much more of just the marketing creative, like other side of it. It really fascinates me from the business and investing standpoint, because, we've been investing for so long that, my mind goes there first and foremost before even, traditional, buying and selling homes does. So I appreciate it.
Of course.
Your insight. Now, is there two things, anything that you want to leave viewers with, number one, and number two, kind of who's the ideal, person? So somebody sees this and, I get you typically work more like B2B, but just kind of how can they find you? Who do we work with? How can we support you as well?
Of course. I guess the central message I would want to leave people with is that, buying a home or buying an investment property, these are massive financial decisions, right? Often the biggest financial decisions people will ever make in their lives. Mm-hmm. And, the data is out there to help make those decisions in a much more informed fashion, right? And that's what Reventure Consulting does. That's what I do. And so we help clients one-on-one. You're right. A lot of my clients are more institutional, big developers, big lenders, big owners, but I also work with a lot of, upstart investors. I work with some people looking to buy homes, right? And I do a lot of one-on-one work with them, almost like we just did here over the last hour, going through data on a screen share, going through data by metro, by zip code, really helping people understand what they're getting into financially when they're making these investment decisions. And, where are the best places to put my money if I'm making a real estate decision? So that's. And
on another note, I'm trying to, because many of you may or may not know that my background's been in creating information products and training programs. So I'm trying just to push Nick into creating some trainings and programs that he can share this information with more of the masses for his business.
Of course. Yeah, no, I'm very excited to do that and excited to work on that more in the future. In the meantime, The best ways to learn more about me and what ReVenture can do for you and your real estate goals is to visit my website, www.reventureconsulting.com. There's a lot of great information, a lot of tutorials and videos and insights on there, and drop me a contact form if you want to talk further. And then another great way is to subscribe to my YouTube channel, which is ReVenture Consulting on YouTube. Every 3 or 4 days, I put out content kind of very similar to what we did today, exploring different markets, exploring different real estate data across the US. So www.reventureconsulting.com and the ReVenture Consulting YouTube channel are great first steps to learn more.
Awesome. Well, again, I want to thank you for your time. It's been very informative for me and everybody that's tuned in for all or a portion of it. So I just want to thank you again so much for your time and taking part of your day to share your passion and your business with us, because I think it's so important to understand, where you live and where you're moving to, and just, feel good about the decisions you're making, with regard to your, family, your future, your wealth, et cetera. So thank you so very much. And I look forward to chatting again in the future to see where we are in 6 to 12 months from here.
Of course. Yeah. Thank you for having me on, Heather. I really appreciate it. I also just want to say, I moved to Austin 5 months ago. This is a great city so far. I'm really enjoying it. And I think it's gonna be my long-term home. So Austin is great.
Awesome. Well, that's a good endorsement then. Awesome. You have a great day and happy holidays to everybody as well.
All right.
Bye-bye.
Thanks, Heather.